there are different forms of money, token-based money. I mean, you mentioned some about stablecoins or tokenized deposits and CBDCs. The main difference between these is who is the issuer, who is issuing this type of money, and conversely, if you hold this kind of money in your wallet, in your account, what does that imply? Against whom do you have a claim, basically? CBDC, as the name implies, central bank digital currency, are money forms issued by central banks, while the other ones, stablecoins or tokenized deposit, are money forms issued by private institutions. These can be a bank, for example, representing a deposit in tokenized form, hence a tokenized deposit, or it can be a company or an aggregation of companies issuing a stable coin. Now, that's the main difference between those. Now, in the usage and regulation, of course, there are different ways to categorize the security and regulatory aspects of these different forms of money, even just by the fact that they're issued by different entities. So central banks underlie specific terms of regulation, while private institutes underlie separate ones. And as for the usage, they're all used as settlement assets. So whenever there is a payment to be made or a cash element to a transaction, then a certain form of money is needed. And of course, there are different levels of risk consideration based on different forms of money, as I said, because there are different issuers behind the different forms of money. So depending what type of money is being used, there is a different risk factor applied to conducting business using a certain form of money. Some may be more costly to cover for the risk, and some may be more efficient because there is a reduced level of risk associated with the form of money.